All right, welcome to another episode from the Chart Reader. So interesting day, and I gotta say it was on a different stock than I was expecting. So Tilray obviously dropped earnings this morning. A bit of a mixed bag of headlines, but I think I'm seeing more bad headlines than good headlines. Overall, though, interesting candle to say the least. There were moments where it looked like we were going to go well below the 100 moving average. Clearly, we actually ended the day a little bit over it, right? So I'll talk about today. I'm obviously going to ask you your opinions about the earnings call. You know, I don't have necessarily many of my own, right? But CGC was actually the interesting one today. And I'll be honest, CGC to me was nothing more than a textbook technical bounce. All right. And I'll talk about that when we get there. But I say it often, it's hard to break two lines up. It's also hard to lose two lines down. And that's kind of what we saw today. All right. So I'll talk about that right there. And then truth be told, I have no idea what ACB, SNDL, and HITI look like. So those three we're basically going to do live together. But before we go any further and I give you more of my thoughts and opinions, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how these things are setting up short term. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself, excuse me. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can please subscribe to the channel, share this video online with your friends, comment good or bad. Look, anything you can do helps me out so much with these YouTube algorithms, but for real, just being here and giving me your time is super appreciated, all right? So let's get into it. And again, before I talk about the charts themselves, Tilray dropped earnings, all right? And generally speaking, all right, I don't want to make it sound like this is like a definitive statement, and obviously what I'm going to say didn't happen here, but whenever earnings drops, like not drops good, but like whenever someone releases earnings, let's get rid of the LA slang, excuse me. When a company releases their earnings, I generally expect a plus or minus 10 day. I do. I always feel like the market's going to either really like it, really hate it, and then continue from there, right? We clearly do not see that on Tilray, basically ending flat, all right? I know it looks like a relatively big candle, and, you know, I'll talk about the actual day shortly, but I mean, in general, the fact that it didn't even move a full percent up or down, literally the day it dropped earnings, is a little interesting. And it wasn't quite a doji. I think if it was going to be this flat, I probably would have assumed it would look something like this. This is what a doji candle looks like. That's another one. That's another one. When you have a very thin middle and basically some you know, lines up and down, right? This is a pretty definitive bad candle, but a minimal day. And to that, the one good thing I saw on the earnings, like headline, again, you know I don't click into them, right? So I really do want your opinions on what you all thought about it. But the one positive headline was, relatively speaking, it sounds like Tilray gave some good guidance for 24. All right, what does that mean? Look, we are done with 2023, all right? For most people, we are in Q4. There's only 3 months left. Some people don't necessarily do a calendar view. They, you know, whatever. Nonetheless, 2023 is almost old news now, all right? So when a company starts talking about 2024 and they're starting to give some good guidance about next year, now again, I didn't read anything. I don't know how good the guidance was, but yeah, I saw something about optimism going into FY24, fiscal year 24 is what that means. And hey, look, I'm telling you, if a stock is willing to signal strength tomorrow, I'm not going to lie to you, that kind of matters more a little bit than what today did. And if I had to guess, I think that's why we saw this flat day. Because again, today's earnings weren't fantastic. We missed earnings per share. EPS is probably the biggest measurement of how you did in your earnings report, all right? That said, if you're willing to say, I didn't do good today, but come next year, ooh, get ready, all right? And again, I might be over-exaggerating what happened, right? But you get the point. If you're willing to give good guidance about tomorrow, you might get a little bit of forgiveness for today, all right? And I'm going to do a little bit of homework. I'm not going to lie to you. You know, I normally don't go into the finances. I normally don't go into the news and stuff like that, but I want a little bit more about their FY24 guidance. I actually want to know what they're thinking. I want to know how much better they think things are going to be. Because again, if you can raise guidance and then hit the raised guidance, oh, that's not bad at all. All right. Now, if you raise guidance and go beyond that, that's a lot more strength. And in all honesty, and this last one's really an opinion that I don't have much of a backup to fact it, but I think if you raise your guidance, you miss the raised guidance, but you're still better than that initial call that you raised it from. I think you also might get a little bit of forgiveness because they're going to like maybe think, all right, you got a little aggressive. Maybe you can't do it on this one. Maybe you'll do it. Again, I'm just kind of talking out loud right there, right? But all that said, let's get into the chart, all right? And again, what I was kind of ready to expect was a pretty big extreme up or down, all right? I was expecting to either maybe get back around here, maybe regain these two and hopefully go after that 260 line, or kind of what we saw play out at some point during the day. I thought we were going to fall well below the 100, fall well below all five and work our way down. Excuse me, sorry, a little hiccup there. Again, I'm going to say it. Whenever an earnings is released, it's hard to imagine a not extreme day, all right? So didn't do my 250, didn't really even do it actually wicked it. That is what I would have expected. Generally, if you watch, sorry, I moved my shoulders. Generally, if you watch my videos, I would put a line around 50% of a big candle. Again, would I have been exact on it? We're not here for exact, right? But we, at some point, 50% candle this thing and then made our way back up, right? So I don't know what to think for tomorrow. I'll be honest with you. This is where, and you know I don't do it. You know I'm not like looking at my better ones and then making this recording to seem smarter or cooler or anything like that, right? But this is where I would actually need a little bit more of an indicator, a little bit more facts to make a decision here. Because look, what I am seeing is an 8 moving average go down. I'm seeing a 20 moving average go down. Those aren't good. We're clearly all of these days under both the lines, and you know I always say it, bad things happen under the two lines. I'm not sure how this earnings is going to be perceived tomorrow, because this is not a doji, all right? Generally speaking, I say the day after the doji is pretty telling. This was a doji, day after it was, and then it went, right? Again, just I'm not blah blah blah, but I'm believing that 250 or 209 close that I was assuming would happen today might happen tomorrow. I actually do think that though this is not a doji, the extreme drop down and then kind of come back up, I think that screams a little bit of an uncertainty. And truth be told, oh man, no, that was a decent drop. We opened at 233. We lost 11 cents, which is about 5%. That's a 5% loss candle right there. I don't like that much. That's a little bit bad. Look, I mean, some ways I can talk about the wick trying to. I'm telling you, I don't know. I think the guidance of 2024 is what's going to be important here. Is the market willing to forgive today in hopes of tomorrow, or are they not? Are we going to lose this and drop? So I think that's my best guess here. I think we see a rather extreme 250 or a 109, maybe 240 or 215, 216, basically a little below this or a little above that. I think maybe one of those two, but I think ultimately the confirmation is going to be this or this. I'll be honest, I still am not sure if this is going to break the 260, because again, I'm about to say it on CGC, but look, CGC was saved by those two lines because it's hard to lose two lines. Sorry, Tilray. It's hard to break two lines, and roughly speaking, these are going to meet right here in the next day or two, right? Like, I don't know the math behind these, but I can follow a trend pretty well, right? So that's going to be a hard point. It for sure is. But hey, maybe we can sneak over this one. Maybe we can sneak over this one. Maybe, right? So I think I need a little bit more from the team here. Let me know what you think about the earnings, but In terms of the technicals, I feel like we're waiting for a little bit more. Where are we on the weekly? All right. So there's a couple things I see here, all right? I'm going to try to give at least a little bit of a positive take here. I'm going to start down here. So we've obviously been we've gone down, I mean, roughly speaking, almost 33%, right? Roughly $3 to $2, losing a dollar is 33%. It was a bad move, but I'm now kind of seeing what might be a bad volume reduction, and hopefully we can maybe restart a good volume uptrend. All right, ideally this holds really well. All right, ideally we can bounce essentially like we did this week, and then maybe start reclimbing and maybe start going back to this. Look at that, basically 260, right? You can see the 8 average, if you're looking in the box over there, is 262. So maybe we start trying to recover a little bit and maybe work our way up. Now, again, the same difficulties I thought right here on the daily, obviously I'm going to think right here on the weekly. And again, just as you zoom out, that 50 moving average on the weekly is no joke. I remember that from the last video, actually. So, you know, maybe we can recover. Maybe we only even go this high. Maybe the highest we can actually go is 250, 248. And again, I think that's almost where that was. Yeah, look at that, right? So on the weekly, I basically took the half of this guy, which roughly speaking is almost the half of this guy right here, right? So 248. Again, going from 222 to 248 is roughly a 10% up. Not too shabby, right? But I said it on the last video. I'm going to say it again, all right? Technical analysis is not this like perfect guarantee of anything, all right? But man, we tried to break the 200. We tried to break the 200. We did break the 200. We did break my resistance. I am shocked that we're not in the 4s, we're in the 2s. All right, it's extremely disappointing to see. All right, it is, okay, but it is a very important reminder that there is no guarantees. All right, all we're really trying to do with technical analysis is balance the favors like 52% to 48. All right, it does Vegas really, really well. It'll do us really well. But unfortunately, this is one of those moments where the dealer is showing a 10, the player is showing a 3 or a 4, but lo and behold, they have an 11. When they flip it, they double down and they beat the house this time. We are the house. We, using technical analysis, are the casino. We're not the random gambler sitting at our table, right? Like, that's a real thing. I hope you do. You see the same way I do, all right? But Tilly, let me know your thoughts and opinions. Obviously, you know I'm not here pretending you know it all right? Let's get into CGC. And again, CGC ends up having that double-digit day that I was expecting Tilray to. CGC actually was a little bit higher at 1.2. I know I saw the day above 10%, right? It looked like we're almost 3 cents higher. At one point, you can see the high of the day was 79. 3 cents is roughly 50% more than we like. There was another, it was almost a 15-16% gain at one point on the day. Like I'm pretty sure I saw that, if not at least like 13 and 14. Nonetheless, okay, it was CGC, not Tilray, that did it. And the only reason, all right, the only reason I believe it happened was because these two lines. Now, if there was some sort of news that I missed, let me know. But again, you hear me say it often. It is hard to break multiple moving averages up. It is hard to lose multiple moving averages down. And the fact that, I mean, these were essentially the same number, right? 0.67, 0.67. If I had more decimals, I mean, they were probably like 0.67, same number, different number, right? Like they are less than a stone throws away. They're a stone roll away, right? So that makes sense that it was a hard line to lose. That makes sense that it'll give it a little bit of a rocket to go from here to here. Like that's a big little gain right there, right? Like that's actually that's a nice little gain right there. I'm not going to take it away, all right? That said, what am I seeing? Like there is a horizontal movement, a horizontal moving average cluster, all right? The lines aren't crazy tight. So there's still an advantage to be taken here, all right? I'm meaning like it's still, there could be some good to be had here. I said that so horribly. But ideally tomorrow we close at 82, all right? If we close at 82, 83 tomorrow, there's reason to start to believe that we might now go up to 98. 98 will be very difficult to break, all right? I wanna say that one more time. 98, this 20 moving average line right here, will be difficult to break. I think there's a shot that we can actually get over and get relatively nicely over that 8, okay? Look, going from 75 all the way up to potentially $1, you're adding a quarter on a 3/4 stock, right? So that's a quick 33%, all right? I wouldn't be surprised if we maybe stall out around 91. But again, adding 20 cents here would still be a really nice little move, okay? MACD is actually still positive, and this is what it's come on. Okay, it's a little hard to see. That was going a very hard slope. It's now kind of like flattening out at what seems like a positive, right? Like MACD is doing its best to not slip below the dashes and slip to the negative. It's still holding a positive. That's all I needed to do, right? This RSI has now, it was at one point a very ridiculous 92. We've now dropped to a low number, all right? 30 is low. And again, I'm not trying to take away from the fact that we've been lower. We've been in an RSI of 14, right? So I'm not trying to like undo that. Whoop, sorry. But the fact that we were this high and have come this low, man, that's more than enough for a healthy cool down. And it needs to let us know if it's no longer going to be healthy or if it's going to, you know, accept the fact that this is good enough and start going up, right? And I think tomorrow is going to be the day, and I think tomorrow is either going to break this 8 moving average or it's not, all right? So CGC I think is well worth looking at tomorrow. I think there's a shot at a nice little candle, and again, possibly even a continuation to an attempt at the 20. Again, I'm not 100% this breaks. Obviously, if it breaks, we're going to start talking about 106, potentially 130, 140, right? I keep clicking, sorry about that. But yeah, I'm very, very, very weary of this 98 cent line right there, okay? Did I talk about these ones? I think I did. Yeah, I think I did. Let's talk about the weekly real quick. Man, the weekly, where are you? You're actually under it. You can see that the red is under the green. We are under the 8 moving average so far, all right? Yeah, there's not a lot of like good or bad happening here, actually. It's weird. I guess in some ways the one positive to say is, yeah, we're still kind of over 50% candle of this big one. Clearly, you know, I'm going to care more about the 8 moving average than a 50% candle line. So let's see where Friday ends this. Hopefully we can regain a little bit like we've been talking about, and that'll at least make the weekly look a little better. But yeah, CGC. For sure a technical bounce. I'm not sure if there was any more. Listen, if this goes below like 66, 65, let me back it up a little bit. What are you? Yeah, if this hits 64, 63, I'd start getting worried. I would, because that could actually be a quick drop to like maybe 50, if not 53. And that's a 20% loss actually if you're losing roughly 12 cents right there. So more than 12 cents. No, I did bad math. Be careful. That's the moral of the story. All right. So CGC, I think that was good. Let's look at ACB. I don't know what this chart looks like. Ooh, not fantastic. Not a fantastic chart. Why? Very simply put, we're under all 5 moving averages. You do not want to be under all 5 moving averages. That's a thing you hear me say often. The one thing I'll at least hold true is I don't think we've wildly confirmed that the 100 moving average has been lost. Now, we lose it there and kind of do have a bad confirmation candle right there. I'm actually a little surprised to see this one. I think, however, this now negative MACD that looks like it's ready to keep going lower, this RSI that, like, I'm not going to lie, looks like it's not done yet. Like, this, I don't know. I think there's more reason to worry here than there is to be excited. I think if this loses 53 cents, it'll be a rather quick drop to 49, if not all the way down to 46. And then I think we talked about it last time, 46 is all-time lows, right? It is. So, there's a lot of lines here. I'm going to delete my lines. I think there's too much going on here. Let's delete all 9. Let me redraw a couple new ones real quick. So, I'll draw this one. And that's basically where we're at. I'll draw that 50%. Kind of looks like it's, I don't care about those ones too much, but I think that's a decent line. And then I'll draw that right there. I'm not going to draw one right here. I think that's an insignificant candle. Those are the 3 levels down. And then basically these moving averages are the levels up. I wouldn't mind trying to catch it right here at 62, 63 and trying to ride that up to here. All right, it's not the biggest of percentages. So actually, as I say that, I think that's only a 10% move. Not to like poo-poo a 10%, but yeah, the real place for this stock is around 73, 74 cents. If this can get into 74 cents, man, there's a lot of reason to believe we'll go up. Because again, you want your money above all 5 moving averages so you can fly, not below all 5 where it will die. All right, and that's basically what we're standing on the verge on. All right, and look, that doesn't look like a big drop from 55 to 46. However, if you slip into all-time lows, I often call that a black hole vortex. You will go down and down and down until the hand of God comes from heaven and grabs it for no reason at all. And that's a scary place to have your money. And I say that with no offense to anyone religious, but yeah, it literally will take a miracle for a stock to come out of all-time lows in my eyes. All right, so just food for thought. There's not a lot to like here. Yeah, we're under them all on the weekly. We are well above all those, but yeah, we're under all 5 here. There's ACB, not a lot to like here. One more time. Let's come into HITI, HITI. Ooh, not what I expected to happen to high tide. Interesting. All right, look, a few things I say often, right? And it starts with bad things happen under the 8 and the 20. We definitely are now a few days under them. This is at least an interesting doji to say the least, but I think there's more reason to believe we might be coming down to 150 at this point. This seems like and that's where we're at. Because what it looked like was this 50% candle and the bottom of that line would line up pretty well. It's a little higher than 50%, but yeah, I could see this 50% line holding, which was that 168 that essentially has held these last 2 days. I don't like that MACD. That's an ugly divergence. The wrong divergence just means the 2 lines are going away from each other, and they're going away that, like, we like green over red diverging, not this way diverging, right? And that's actually also what I'm seeing on the MACD. High tide, that's not good. And you know what this reminds me of? I'm going to show you something real quick. NVOS reminds me a little bit of this. A hard wick on a big resistance followed by a decent drop. Obviously this one recovered, so hey, hopefully that'll do something for high tide. But yeah, I think we did a hard wick on a hard resistance. We definitely, unfortunately, had to reset from it. And I mean, look, it wasn't that long ago. RSI was pushing 85, right? So going from the 80s to the low 30s does make sense. And we actually still have a little bit more room before we go. I think we'll come here and bounce up. I do. There is a very, 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 very hard possibility that this loses. Like, this should not go below 140. There are the biggest 2 lines right on each other. Like that, I don't want to say impossible, but it will be very difficult to lose that. I don't think we'll lose this. I think we will hit that 150, but hopefully that will bring the RSI low enough to reset and go back. The one thing I don't know if we're going to get back over 181. I barely think we're going to get over 190 because as the 8 comes down, as the 20 starts to curve, the lines that were good become really hard to break. And don't forget, it wasn't that long ago these were bad lines. And it wasn't that long ago these were bad lines for a while. So high tide. I think the one thing to like from this moment, it took way too many good earnings in a row, but I think the market is now willing to show that it will respect some good earnings from high tide. High tide must drop good earnings in the next 3 months. If it could do it, I think that might be enough to take high tide. look, you know I'm not here trying to guess like long term. That's like long term ain't my game. But I think I don't want to say like I think there's a shot at 3 in 3 months. I think it'll come down a little bit, but I do believe we'll see a little bit of recovery, maybe live in this like 160, 170 world for a bit. Hopefully good earnings will take it up from there, okay? That's kind of a, I am not good at long-term predictions. Like my game is short-term, but I gave you guys a little bit right there because you know I love you all right? SNDL, you know I love calling it sandal. I live in LA too, so sandals are a big fashion statement, so it is said with love. All right. A lot of ways, and I've been saying this for a while. SNDL and Tilray are nearly identical. They're both basically holding on to the last moving average. It's the 100. There's a lot of moving averages above it. Man, I think that it's, again, follow Tilray. If Tilray does well, it seems like this will. Probably vice versa. I would probably say if Tilray, I don't think if this does badly, Tilray will also necessarily do badly. But yeah, it's I think echoing the same thoughts from the beginning. It's going to be difficult to get over these two lines. These two lines are a little too close to ideal. They're two very difficult lines as well. And really, if you broke the 50, if you got to like 180, you're only really going to go up to like 188. That's not even 10%. No, it is. No, it isn't. It isn't, yeah. Look, SNDL, get over $2, get back over all 5 moving averages. Same comments I said with Tilray. Listen, this thing tries to hit the 2. This thing tries to hit the 2. This thing tries to hit the 2. This thing breaks the 2, breaks multiple moving averages, never even gets that high in RSI. I'm a little bit shocked that we didn't go higher. I am, all right? End of the day, technical analysis is it's only a tool. It's not a guarantee or anything, right? So I think there's a little bit more reason to believe we'll lose 162 than there is reason to believe we'll break this. Ideally, we can get over 170. Like if we can get into 180, I think I'll start believing a little bit more. I really don't like these two lines. I think the the 50 and the 200 are hard to break by themselves, let alone that close to each other. And it's going to take us several days before they actually really separate hard enough. So I don't know. And this thing's coming down pretty fast. Like probably in the next couple of days are going to meet around there. I think the lines are not liking this stock. They're not. Yeah, I don't know. I don't got too much here actually. Oh yeah, this ain't a good weekly. That's a big drop of the 2. It is. Because like this again, like I said, it's hard to lose 2 moving averages. It's the candle after the doji. That's a bad candle after the doji too. What are you at? 161. 162. I'm glad that there's a line on both the daily and the weekly. Maybe that will be hard to lose. I think I'm going to give this line a little bit of strength, benefit of the doubt, but not too much to like on this one actually. So let me know if you disagree as always, right? But I think that's it for this. Let me know your thoughts and opinions. Otherwise, thank you.